county jail. The prison band was there, they began to wail. The band was jumping and the drum began to swing. You should have heard the knocked out jailbird sing, let it rock.
Welcome back.
Everybody let it rock.
We've been talking about this movie, The Big Short, and I've been discussing how our firm actually uses strategies that are similar to that movie. That's why it's such a great movie for us to reference. I took my wife there for her birthday. That was her pick, not mine, which I love to see. I didn't want to ask her to go see that movie. It's a financial movie, but it's a great movie. It's up for 5 Academy Awards. I would highly recommend it. In fact, I'm thinking about having a little private showing for my clients because it's that important. So one of the things I want to talk to you about is there's psychology to markets, right? And it's always been said by the quote economists, the academia, that markets are efficient and rational, and we're like robots, and we're going to do things exactly the way that the economists say we're going to do, and that's just not true. It assumes that if markets are declining, rational investors would rather scoop up bargains with its behavior to stabilize markets. That's part of the academia thought. That's wrong. People run for the exits when markets start falling, right? And when you're already fully invested, how do you buy low? You're the dip. You are the dip that lost the money, right? Buy the dips. I'm not saying you're a dip. You're part of the dip. Your 401k, your IRA, you're invested, right? So the market loses 30, 40%. How are you going to buy a dip? You lost your money. So rational thinking goes out the window, and there's some psychology behind this. If markets are crashing, most investors will panic and dump stocks rather than look around for so-called bargains. And that's just human behavior. And they get amplified during these crises. So there's these biases that come in many forms, and these are actually part of what's called behavioral finance. And one is called herding, and this is a tendency to follow the crowd. Whether that's the talking heads on CNBC, Jim Cramer, or whoever it is, right? Okay, all these experts, they know more than I do. The Federal Reserve has 400 PhDs that are economists. They've never one time ever predicted a recession, ever. Never. How is that possible? They're so smart. So, number one is herd mentality. Everybody's either bullish, bearish. Anchoring is another one that I like to talk about. That's a tendency to give too much weight to a particular event, whether it's positive or negative. And confirmation is one of the biggest things that hurts us. And that's a tendency to embrace data that we agree with. So we're always trying to validate our position. It's part of our ego to make us feel safe and exclude things that go against how we feel. So those are all things: herd mentality, anchoring, and confirmation, trying to confirm what our thoughts are. So the reason I'm bringing this up is I don't want you to, it's hard. That's why you need an advisor. And I always talk about the right advisor. The right advisor, number one, is a fiduciary. We're a fiduciary firm, registered investment advisory firm. If you're not with a fiduciary, find one. Okay? They have the highest duty to you from a service standpoint, from a client relationship standpoint. We have to put your interests ahead of our own in the firm. Brokerage firms don't have that duty. Number one. Number two, make sure your advisor is an expert in retirement planning. We just won the award for 2015 as the National Social Security Advisor of the Year Award. Very proud of that. We're experts in Social Security, experts in retirement planning, experts in taxation. When you retire, you need an advisor that can do this. So make sure, if your advisor cannot do all of these things, you need to fire your advisor and find somebody else. So if you want to have a second opinion from me personally, David Reyes, and have me review all your stuff, specifically today, your investments, I can help you to protect your assets now. Give me a call, 1-800-611-1967. That's 1-800-611-1967. Or go to the web and visit me at reyesplan.com. That's REYES plan.com. Also, I've been talking about, because it's going to be next Wednesday, an event. I do events about once a quarter. And this one's called The Essential Financial Strategies for the New Economy. I'm going to be talking about protecting your money, increasing cash flow. For most of my clients, I can double their cash flow that they would normally get with traditional investments. We're going to talk about political cycles, the Washington, D.C. effect. How does that affect your retirement? taxes in the IRS, how to mitigate taxes in your retirement, and talking about making sure you're with the right advisor. So if you want to attend this workshop, I'm going to buy you dinner. I think there's a handful, 6 to 10 spots left. We have lots of demand for these things and they sell out. So I'm talking about for the last few seats we have. That's Wednesday, January 27th at 6 p.m. at Bistro West. That's Wednesday, January 27th at 6 p.m. at Bistro West. And you can just give us a call at 1-800-611-1967. That's 1-800-611-1967. Or go to our website again at reyesplan.com. That's REYES plan.com. So did the last, we're down 10%. We're up a little bit more, a couple percent the last couple of days. But 10% loss. I think we had a 12% down in the Dow. Did you get a little nervous or close your eyes and not look at your account? If you did that, then you have that gnawing feeling, right? And I want you to get rid of that. So, what is NAW? Need, willingness, and ability to take risk. So that's my little acronym. So most of you don't need to take on the risk you're taking, I can tell you. When I look at most statements for clients and I analyze their portfolios, we have really, crazy, powerful, expensive software that can tear your portfolios apart and tell us what type of internal risk is in there in different types of scenarios. 08, 2000, 2001, all types of market scenarios, Great Depression. So the first thing is our need to take risk, right? So if you don't need to take on risk to be successful, because we want to build portfolios that have the least amount of risk with the best outcome to make sure that our money is going to last the rest of your life and your spouse's life. That's it. So we want to take the least amount of risk to achieve our goals. That's all. So I see people that are taking on way too much risk, which is insane. Okay, don't need to do that. So what is your need to take on risk? And then what's your ability? You may be taking X risk, right? But your ability, your emotional ability to handle, right, this drawdown that we've seen that can be more significant. I think we're going to have a much more significant 20, 30, 40% bear market here. That's just my own thoughts and people that are a lot smarter than me that I entrust, that I go to for my own finances and for my clients. Is your ability to handle that and your willingness. What is the willingness of you to do that? And I think the bottom line is we want to build portfolios not only that you can count on for retirement income. They're going to last the rest of your life and your spouse's life. And so we want to make sure that we don't go through these cycles in the market that I think we're about to enter again. So if you want to see me personally and offer my second opinion to you, that's 1-800-611-1967, 1-800-611-1967, or go to reyesplan.com. That's REYES plan.com. And I will personally look at your financial life. And I will at least promise you one thing: you'll learn stuff you didn't know. And I think that's worth it. So if you're willing to spend the hour with me, then I'm willing to spend the time with you at no charge as a KFMB listener. Also, I want to again discuss the event that we're having on January 27th at 6 p.m. at Bistro West in Carlsbad. It is called the Essential Financial Strategies for a New Economy. We're going to talk about all kinds of things, how to protect your capital from a market crash, that's one of our expertises, is how do we manage risk. We do it much differently than the average advisor. We use institutional risk management. We use basically strategies that can insure against catastrophic risk. We'll talk about the Washington, D.C. effect, how legislation will affect your retirement. So if you want to come to that event, there's only a handful of spots available. That's, again, Wednesday the 27th at 6 p.m. at Bistro West in Carlsbad. If you want to come, 1-800-611-1967. That's 1-800-611-1967. Or visit me on the web again at reyesplan.com. Hang on. We'll be back for our last segment. This is David Reyes, your retirement architect, here on AM 760 KFMB.
You're listening to the Retirement Architect, David Reyes.
Oh, really? I
professional men.
We design and build retirements that last a lifetime. The retirement architect, David Reyes, will continue next.